Greetings, this is Dr. Jeffrey Scott, and this is my market MRI update for March 28th, 2025. Titled today, you know, the markets fade into the end of day with the PCE complex on deck. So I'm ready for some volatility, and I hope you are as well. It doesn't mean I want the volatility. I think I've had plenty of volatility over the last several weeks, but I think you can count on some in the markets on Friday. Email address is marketmripro@gmail.com. If you're new to my channel, go ahead and subscribe, hit the alarm. If you like what I'm doing, hit the thumbs up. For those of you who commented on my question about whether people actually watch these videos and should I continue doing them, thanks for the accolades. I wasn't looking for that. I was looking to make sure some people were paying attention. I don't do a lot of prep work for this. This is just my routine that I do every night. I just record the end. And so it's not a lot to do, but every night it adds up over time. And as long as people are watching them and finding value, I'll keep doing them. I've been doing them for over 20 years, but not nightly before. This is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of everything I do is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I do have tools on multiple platforms, but I focus pretty much on these now with the market MRI tool, which combines, excuse me, my favorite parts of a lot of different tools that I use. Now, if you're looking for the wealth charts video, I'm going to do one probably tonight because I have a early flight. And that'll be posted around 8:30 a.m. at stocksanddocs.com. Really good full feature platform where my tools are available. Live meeting, Orange County, June 6th through 8th, Residence Inn and Suites. I'll hope to have the additional speakers identified or announced next week. Greg Mills is hosting. Typically, it's $300. It's a low budget. It's all value, and you can buy your own coffee. Keep the price down. Google Group is Top Down Trader. How do you join it? You just go to Google Groups, put in your Google ID, search for Top Down Trader. Why do you want to join? Because I didn't post last night. It's on YouTube. There's a lot that I just post in the group. I may give intraday updates in the group if there's something for me to say. I give you discounts on my tools, and I do education programs sometimes on the weekend for group members. So it's free. You get discounted coupons, and you can quit anytime. As I mentioned, PCE complex is the big story. On Friday, you've got some consumer sentiment at 10 a.m. as well. And after hours today, Lululemon missed going forward and sold off pretty hard. And you can see light earnings before the market on Friday. As I like to say, it's a judgment call to hold stocks over earnings. It's bad judgment to not know when your stock's earnings date is scheduled. Let's go and take a look at some charts, which is why we're here. All right, let me kill that. All right, so let's start with the part of the tool that is basically the piece that allows me to look at the market. Over here, let's just rank by performance of some common ETFs. The VXX, which is volatility, was the highest performer. Never a good sign. Not a big move on the SPY, Diamonds, and Russell. They were higher earlier and they faded into the end. Q was the worst performer, but only down 0.5%. And, not sitting on the bottom by any means, but somewhere between 30 and 50% for most of the indexes. Still seeing more new lows than new highs on both the NYSE and the NASDAQ. These are 4 different time frames. From a one-day change, sort of reversion back to where Staples led. Everything else had minimal moves or were negative, and the laggard was energy and technology. On a theme basis, cannabis, it's hard to get excited. It doesn't seem to go trend with multiple days in a row in the same direction. What it seems to do is bounce around a lot on news and whether or not there'll be any legislation that helps out cannabis providers. Imagine you can't use the interstate banking system, but you could see besides cannabis, which over a month is down 17%, um, gold and silver, lead. Other than that, looking at the one-day change, so you got gold, silver, China, which has been super strong, clean tech, and then it falls off. Over here, you could see when I look at each of the S&P 1500, NASDAQ, and NYSE, although it wasn't a positive day at the indices, there was improvement, more positive sectors, less positive industries on the S&P 1500, big improvement on the NASDAQ versus the prior session in gray, and kind of similar in the NYSE. 42% of the stocks in the S&P 100 were up, 45 on the NASDAQ, 45 in the NYSE. So indices were down, markets were mixed, and average stock probably, well, on average, not a lot of movement. I'll just leave it at that. So that gives me a sense of what happened in the market on Thursday. This will update real time. It's after hours here, but if you hit refresh, it will update for you during the market day. The timing model, let's start with the weekly. I'm in hotel internet, which is not always as fast as home. You can see if you look, here is the bongo, here's the WMA, and on the bottom of each panel is the signal. So on the weekly charts, the spiders, the Qs, the diamonds, and the Russell remain in a sell signal. So the intermediate trend at least is down. If I look at the daily, the short-term trend is actually up, which fits the motif of retracement in a downtrend. It's kind of interesting that each of these are green on the signal. I'm mixed. I do think we're going to go lower. The question is, do we go higher before that happens? Again, not a bullish picture by any means, but with the intermediate long, short and the short-term long, that's really that retracement. If we can look at monthly timing, which I don't spend much time with, and 3 out of the 4 have turned negative, which is bothersome. The one thing that hasn't turned negative yet is the diamond. So my guess again is I think we still have more lower to go, but this is the week we've been looking for. Will we retrace? How high will we retrace? Are we done? Let's take a look. I look at the US index ETFs, and let's put them on daily charts. Perfect. I highlight the box, I hit this, and I'll bring it up. So this is, to me, are clearly bear flags. Flag pull, flag. A breakdown below this line, and maybe the line can be redrawn in a better area, is not going to be good for the markets. And, will we capture 60% of the pull again to the downside? So if I sound bearish, this is why. We ran up to the 200, doji on it, we failed. Now, we're pulling down to a trend line here with the doji, so maybe we get another leg attempt. We're still going to have to break above the 50 before I turn bullish, and I don't think that's likely to happen. So that is the spider. Take a look at the Qs. Similar picture. And reality, I think you can almost argue the same story. I guess we didn't activate the lines. I have to do that on the other chart. But here's a bear flag, kind of a doji-like with a topping tail. Is this a reversal candle? But notice right into the 200 and reversed. That was my one of my scenarios. Certainly not my bullish scenario. So that does not look bullish. We could rally all the way up to 494. It's 12 points, 3% and fail. We can rally up to 508. 16 points, 4% and fail. So I still think we're in a downtrend. I still think we're going lower. If I take a look at the diamonds, blown up here, different. This one has now pulled back to the 200, and you wonder if that could turn out to be support, and then that will put the 50 in play. But are we in an uptrend or a downtrend here? We're either sideways or in a downtrend. And this still looks like bear flag territory to me. What else do we look at? The Russell, this is one that's been the weakest and is well below the 200. There's your death cross. And again, it ran up and it's pulling back already. So it's hard to be bullish here. Obviously, the PCE, if it comes in Goldilocks, maybe we get Fed heads talking about more cuts. But I want to wait and see. I'm not rushing out and trying to predict. Plus, I can't trade much before 8:30. I don't like doing pre-market trading. The VIX, opposite, pull back to support, and it's moving. In fact, it broke through the 50. I think the VIX is going to be interesting to watch here. It was up almost 2% in the markets on Thursday. And then lastly, the dollar, which, it's well off of its highs, consolidating under here, had a big run up. It actually pulled back a bit, about minus 0.31 on Thursday. So markets don't look to me like they want to go higher. You want to see what high looks like? Look at gold and silver. Silver, man, what a day silver had today. But both gold and silver are very strong. Oil's sort of stuck here between the 200 and the 50. A break above would be bullish. Natural gas pulled back to the 50 and bounced. See if it can't go higher. And then if you look at the 10-year, let's look at the 10-year on the price action. This is probably, so here's the 10-year um, on Thursday. It was up, but it closed at the bottom of the bar. It was up 0.72. But even rates have come down. We'll see if that 50 acts as resistance. So commodities look like they're going higher. Stocks to me look like they're going lower. I wish they were going higher, but it's hard to get very excited. Now, April 2nd is the D-Day, or should I say T-Day, for the collateral tariff discussion, and maybe the markets rally after that, but we will see. If we look at the buckets, get a sense of the distribution of the stocks within their Bollinger Bands. I called it a bell curve yesterday. I think shifted a little bit to the left, a little weaker than it was prior, but it's still relatively neutral. The market breadth tool, you can see the NYSE failed at the 50 on on Wednesday. Thursday came down further. I mean, it looks like it wants to come and visit the 200. And you could see it looks like we've already rolled over here on the big NASDAQ. Down here, we